Hey everyone, it's Matt Donahue with Mission Financial Planners. I'm coming to you on the road this week. We're still going to get you your market recap though. We're going to talk about tax strategy, a little bit of ancient wisdom to help you navigate 2025 like a pro. So let's dive into it. So retail sales ticked up 0.2% in January, not explosive growth, but a signal that consumers are still holding strong despite higher interest rates. The Fed decided to keep rates steady at 4.25% to 4.5%, sticking to their wait and see strategy. What had everyone talking was the market correction though. After a powerful rally driven by AI optimism and mega cap tech, the so-called Magnificent Seven turned into being not so magnificent. A sharp 10% drop hit by mid-February, the seventh fastest since 2029. Those seven stocks down 12% year to date. The S&P 500 off 3.6%. Strip out those names and the index is basically flat. Meanwhile, global markets surged. China rose 18% off its own AI breakthroughs. Europe gained 16% thanks in part to Germany's massive 500 billion euro defense plan. And the bottom line is U.S. investors, all of us, we need to diversify. Concentration risk is real and performance can shift very quickly. Let's talk a little bit about tax planning because tax season shouldn't just be on April 15th. It should be all about aligning your strategy with your life all year long. First decision is, am I going to itemize or take a standard deduction for 2025? That's $30,000 for married couples and $15,000 for singles, plus more if you're 65 or blind. But itemizing can save you more. If your mortgage interest, property taxes, charitable giving, or medical expenses exceed that standard, pro tip, run both scenarios. Choose the one that saves you the most. And don't sleep on retirement contributions. The Secure Act raised the limits. You can now contribute even more to your 401k. There are more catch-up provisions if you're 50 and older and 60 and older. So make sure you reach out to us and learn more about that. Don't forget as well, HSAs, health savings account, those are kind of like tax ninjas. They have a triple tax advantage. Contributions go in pre-tax, they grow tax-free, and they come out tax-free for qualified health expenses. For families, hey, that's almost $9,000 a year that can be put in. Education tax credits are another win. The American Opportunity Credit offers up to $2,500 per student. The Lifetime Learning Credit, hey, $2,000 per return. Both phase out based on income, so make sure you're within those AGI limits. Any life changes, hey, they change your tax picture. A new baby, a job change, buying a business, taking care of aging parents, all of it has tax implications. That's why our 2025 Financial Fitness Checkup is so powerful. It helps you align your financial plan with real life and keep more of what you've worked so hard to earn. A little bit of wisdom and then we'll wrap up. So let's talk a little Stoic philosophy from Marcus Aurelius. Almost 2,000 years ago, he wrote, "Today I escaped from the crush of circumstances, or better put, I threw them out. The crush wasn't from outside me, but in my own assumptions." That's powerful, but what does it mean? The market doesn't make you anxious. Your assumptions about the market are what make you anxious. The tension you feel, that's internal. The Stoics had a word for it. I'm not even going to try to say it. Check out our blog post if you want to read it. But the Stoics had an actual term for it, and it's the act of taking up a perception and assigning it meaning. So let's bring the same clarity to your money. Try to bring it to your life as well. Let's strip away some assumptions. Let's focus on what you can control, your strategy, your savings, and your ability to adapt. If you want to learn more or schedule your 2025 financial fitness checkup, go to our website, missionfinancialplanners.com. Be sure to watch the full video breakdown on our YouTube channel and subscribe for future updates. And until next time, be intentional, stay balanced, and keep planning.